Hi, today I'm going to talk you through my working spreadsheet and how to work out your win rate and your risk to reward on your strategy. Let's roll the intro and I'll tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. And what I'm trying to do is put trading in the real world. No fake stuff here, so there's no fake Lamborghinis.
You ding dong!
It's just me, computer screens, and answering your questions as I find in the comments below, or you've contacted me through my blog, thescruffytrader.com, and try and answer those questions in plain English. So what's today all about? Well, it's kind of twofold. First of all, what I want to do is thank the people that have donated to the Buy Me a Coffee. There's had some little donations this month. Half a dozen of you have graciously parted with some of your money and collected in just over £100, £120. And what I've done is I've matched that to 250, and we've purchased some disposable masks for the staff at St Cuthbert's, which should be going there this week. And I'll slip that into a little video when they get delivered and you can see it. And it genuinely does make a difference and gives a little bit of safety to those who need it. So I genuinely thank you for that. But what I also do, if anybody who donates a decent amount, I'll send you my working sheet. But the problem is, some people don't know how it works. To me, it's second nature, and I kind of forget that. So I thought I would address it in a video so you have a point of reference. And secondly, I had a good question from a chap down in Cardiff called John. So a good shout out to John, our little Welsh cousin there across the borders. And his question was, how can he work out whether his system is profitable? I'm going to address that as well. So what I'm going to do is I'm going to take you through my sheet and I'll just break it down, so if you ever get stuck you can play the video and you'll see exactly how it's filled in. And then I'm going to go on to answer John's question. Okay. And I know straight away you'll be thinking, well, it's easy. If you've got money in the bank, you're profitable. Not quite as simple as that. So let's jump on the screens and we'll find out. Okay guys, so this spreadsheet that I'm about to show you is something that I use pretty much every day. In fact, I do use it every day because I fill my journal in every day on every trade. And it's broken into a number of parts. And I record my day trades trade by trade, so I can see exactly how I'm performing, because my day trading is my salary. My swing trades are recorded as an investment, which is on this tab, and I'll go through them all. So I can see how my investments are growing, because that is for my pension and for when I'm old and decrepit, which is not too far away from what I am now, as my grandchildren keep telling me. Then it has my journals, so I can keep an eye on my journal. It has a win rate calculator, which I'm going to do at the end. The points table, which works out how many points I need, or pips, ticks, whatever you want to call them, I need to achieve at a certain price point to create a wage. And then finally, it's the percentage growth if I just wanted to work on a fixed percentage. I very rarely look at this, because for me, to limit yourself to 3% per day or 3% per month is very difficult. I work in money, and that's the easiest way. But it's there just for use if you require it. So first thing we do, the first page, which is this, just move my bobble head so you can see everything. Right, there we are, is quite simply an overview. All right, it's a summary, it self-populates, and it makes up this graph here as well. And the only two sections that you need to fill in are the two starting points. So for argument's sake, you start with 1,000 in your day trading pot and 1,000 in your swing trading pot. That is all you need to fill in on this page, and it will make sense in a second. All right. And what it does, it'll start working out based on the inputs of these sheets what your running total is. Okay. And this, bearing in mind, is based on the day trades. So that's all you need to do on the first page. Okay. Then you would come to your journal and you fill in the two green ones again. So you would start with your £1,000 because that's what you are starting this with. So your balance is still 1,000. And then at the beginning of each week, you put in your current balance, which is here. Okay. And then that tells you what your starting grid is every week. Okay. And then that's quite self-explanatory. Weeks 1, 2, 3, 4, 5. This is a 5-week month. This section down here tells you what your current bids are and if you wish to increase your bid. So for argument's sake, your current bid is, just say it's £2 that you're starting with, and you're going to increase your bid as the way that I compound it, because I compound the bid itself rather than the total. It's much easier, it's easier to swallow, and it's less stressful. So if I win, my next point would be £2.10 per point. So it's actually working it out for me. You win the next one, you would just move that into £2.10, and it'll tell you the next bid per point. All right. Max risk is here. My max risk is around 4% of my portfolio at any one time. And the way it's broken up is I have rules that you can write in here, this section. Okay, you just write your little rules of your plan. And one of my rules is no more than 2 day trades running at any one time, 2, at 2% risk each, which is 4. I'm quite happy with that. If I see a trade that requires me to have a 4% risk, I cannot trade anymore because I've got all my eggs in one basket. So that defines exactly how much I can risk at any one time. All right? I have a high risk tolerance, but I have a high risk tolerance because I know what I'm doing. All right? And I am a believer that tight stop losses are more of an account killer than a wide one. All right? But I kill trades before they even hit my hard stop. So again, it negates the risk, and I'm going to go through that in a moment. All right. So that's the first little bits that you fill in on the top. Okay. And week 1 is just equal to the P&L. Okay. So that sorts that out. So you're kind of ready to rock and roll for week 1. Date, self-explanatory. 16th to the 5th. Put in your current balance. So we are at £1,000. The size of your current bid, £2.10. What your risk is going to be within the trade you're about to take. Just for argument's sake, say it's 30. Okay, that's actually telling you now that it's 63, but your max risk is 40. So you either have to dial that down or dial that down. Personally, I would dial the size of the bid. Okay, and if you do that, it works it out for you. There you are. So that bid is now 125 because your stop needs to be where the stop needs to be. And if you reduce the stop, you increase the risk. Increase the risk, you've got more chance of being knocked out of the game, which will lose you money. But if you reduced your bid size and kept your risk the same, you have a high percentage of winning the trade, which will pay you. So yes, your bid size is lower, so you're not getting as much back, but you're not losing. All right, so that's the idea behind it. When your trade is complete, you would have filled in this section here. So let's, for argument's sake, I don't know, you won £25 because you just put the actual total in. You were long in the trade. It's now telling you quite a lot of things. So you knew you started 1,000. You won 25 a bid. It was 30 points to the stop, which risked 37.50, which was less than your max risk. You got £25 as your return. This works out your win rate. That meant you got 20 points. Now this is where, I'll just put my bobble head out the way, these little bits come into it. I always record what mood I'm in. Was I in a good mood? Yes, I was. Did I follow my rules? Yes. All right. And I just put little notes in there. What was the market? Well, say it was cable. Okay. So now it's telling me little things. All right. And then I can just write some scribbles in there. Market was erratic, whatever, but it's another area to add notes. And what it's telling me is this. So the percentage of the trade was an increase of the balance of 2.5%. I risked 3.75 to get that, and my risk reward on it was 0.7. All right. And then you just fill that in. Now that would be, say, week 1. Then all you would do for week 2 is, you know, that was 25, just overwrite that as 25 and then equal the next profit, P&L, for week 2, and your new starting week would be 25. So it goes back to 0. So when you start your process over again, so you're putting your new date in on the 5th, it is now starting at 125. And if you stick at the same level, see how these have all changed? Because what it is you're reducing your risk because your pot is going up, but your bid size stayed the same, and that stayed the same. So the risk started to come down. And you just build up the sheet. And you do that each month. And then when you go back to your summary, what it starts to tell you, actually we'll put a loser in so that that can show as well. So we'll just say on the 20th, you had 10.50, still stuck at 125 with a 30, but you cut it short, minus 20, short. This changes it, tells you how much that trade cost you, etc. Then you can put in your little notes here, bad mood, pumped car, something like that, something why you're in a bad mood, so you can remember it. Then when you go to your summary, it starts giving you a breakdown of what's happened. Okay, so there's your starting grid. So you committed at the beginning of the year with 2,000, and it was broken up into 2 areas, swing and day. That's kind of how I do it. I'll do the swing next, so I'll just move this out the way. And the majority of this is based on my day trades, as I said, because that's my salary and the swings are my investments. So it's now telling me my running total is this, okay, which meant January I got £30. There was a total of 3 trades, 2 win, 1 lose, which gives me my win rates. tells me my increase on the starting grid and how many pips that I made within it, and also this bit here, which is my drawings from the profits, and I work it on 10%. So if you do 10 grand, I will take out 1,000 as a profit. Okay, and that's just how you do it at the end of each month, which is why you work really hard. And just because you've made a colossal amount in 1 week, it's not yours. All you've done is you've built up your bank balance in order to use it to make some extra money, you know. And what happens is your balance is increasing all the time, which increases this percentage, which increases your salary. But also when you come to retire, you've still got a big lump of money as well as your investments. So that's another way of doing it. So that breaks that all down, and it tells you everything that I want to know. But then I look at swing trades. Okay, now swing trades I don't break down as much because there's not that many of them. Yes, I'll have various ones running all the time, but I'm only really interested in what they are making. So again, we start filling in the details. So we're starting the year with 1,000. Okay, I do have a bid calculator here just the same, so it tells me what my bids are going to be. And then what happens is I just start recording from line 3 in the white my P&L. So we'll just say that I made £200 here. Tomorrow it was 500. Made 7 and lost 150. So let's just say that's what I did for the current month. Okay. Now there's different ways. I normally, rather than put the date in, just actually write what I'm doing. I can always go on my deal tickets and see where I opened and closed, etc. So that works that out quite nicely for me. Okay. Then there's my equity curve. Tells me how much I've got, where I'm going, all that sort of stuff. All right. I'm interested in this, so I will have an auto sum. So if I just move my bobbly head out of the way, I can auto sum this lot at the end of each month. So that's 1,000. Move it across, and I'll just type 1,000 in there. Okay, so that tells me exactly what is going on. Okay, and then I can also put in total. All right, because it's telling me what total is up there. All right, with me so far? Bloody hell. Cameras, who'd have them? Right, and now what it's telling me is that balance is increased by £1,000, and it's worked out what the P&L is. That is that. All right, happy days. I then look at a points table, and everybody loves this, but sometimes they get a bit confused by it. So I'll quickly run it over what it means. If you took one trade per day, this one, with an average win of 35 pips, that these columns here is what you'll get based on that bid size. So if you were at 50p a pip, you got 35 pips in 1 day, you would have £17.50, so forth, so forth. And if I change it to 10, you'll see it all recalculate. So there you go. On the other side, this works out your expected wage for the year and how many trades you need to take, how many pips, based on your average win. So if you want, say, £30,000 a year, okay, your average win is 10 pips. This is what you need to do in order to achieve that salary at the end of the year. So if you start with 50p a pip, you need 250 in a day, which is pretty darn hard to get you 125 quid. The weekly wage is 625. You need 1250 pips per week in order to achieve your goal without increasing this bid size. Okay, very, very difficult. Okay, I couldn't do it. And then there you are for the year. You need 65,000 pips, and the amount of trades you need to take is 25. But if you scroll this down and say you are a day trader like what I am, and I'm looking for 2 trades, well, there you go. At £10, at 10 pips an average trade, doing it twice a day, my bid side needs to be £5.96. Now that is in the realms of possibility. Most small account holders can find a trade that'll trade at just say 6 quid a pip. You only have to trade it twice a day and get 10 pips off each trade, or trade once a day and get 20 pips. And you will have a salary of 30,000. So that's how that's worked out and made up. Then you have the compounder. And what this one does, this just literally compounds the amount of pips that you're going to take. I work on the minimums. So if the minimum bid in the brokers I use, because I'm in the UK, is 50 pence a pip, point, tick, whatever you want to call them. All right, and that's what these are. The 5 is the percentage increase of the bid, and these are your desired wins. If you're only taking 1 trade a day, you can just mark them off as 0, and it will give you sort of zeros in their columns. And as you see, the columns are staggered, and the reason they're staggered is if you're building up your pot, that's when it breaks £1. So you can have 2 bids at 50p, 2 columns. When it breaks 150, that means you can have 3 bids at 50p, 1, 2, 3. That's what that's for. These numbers are just week numbers. So if you want to work out how many weeks it's going to take you to do something, you can just run yourself down. Well, for argument's sake, you're doing 1 trade. You run that down, you want 10,000. And you take it down to, well, it's going to take you more than a year because it runs out at 49. Okay. But if you say you were splitting your bids, 15, and what you're doing is you're going 10 first target point, 15 second target point, 20 for the third, or whatever you want to put in, this will start working it out for you. And if you run it down, it starts telling you, and you just run it all the way down. There's your 10 grand there, take you 32 weeks. So that's kind of what this works in. And the last part is just a percentage growth based on your capital rather than your bid size. And all you do is you just change that to whatever it is, and then it alters it and it shows you. I very rarely use this. It was just something that I found and I thought I'd play with it. So once you've looked at all of this sort of thing, and you say, oh, sorry, I forgot to show you that, didn't I? It gives you a quick summary of the swing. All right, tells you everything what you need to know. Okay, but I was asked a question by John. It was emailed in, and it was about expectation and how do you know if you're profitable. And the easiest way to answer it is to short, because the question came because I often say every system works at one time or another, and it does. It really does. Doesn't matter what system you have. It can be the most complicated system in the world or the simplest system in the world, i.e. flipping a coin. it's the part where it needs to be correct is how much you get back, and this sheet works it out. First thing you have to do is figure out what your win rate is, right? Whether it's 40, 50, 60, 90, whatever it happens to be. And the easiest way to do it is scroll your screen back and manually test 100 trades, okay? And that'll give you your win rate based on your bid size, your stop loss, etc. And your stop loss is what you put into this equation first, okay? So you work out roughly what your win rate is, you know what your stop losses are, etc. There's plenty of systems out there have a fixed stop, an average is between 30 and 40. The reason being is it's the noise in the market. They will move that far, and you never want your stop loss in the noise, so it always has to be outside of the noise, okay? So for the case of this exercise, we'll use a 30 stop. It doesn't make any difference if it's 60 or whatever, because the maths is exactly the same. You then want in your head what your win rate was from your back testing. Now let's just say you did pretty abysmal, all right, and you only had a 35% strike rate. You only got it right 35% of the time, and you'll think that's chronic. So what you do is, this is 100 trades, okay? They're your winners, they're your losers. You know that you've just done it, you've got a 35% win rate. So you pull your winners to 35, so there's 35 winners, the rest of them are losers. Put in your bid size, whatever it happens to be. It can be £5 a point, £1, whatever, doesn't matter. For the sake of this, we'll just call it 7. Lucky number 7. So what it's now telling you is I'm stopped out at 30 pips, and that would lose me 210, and I am expecting to win 35% of the time, £7, dollars, whatever, a pip. We need to now know what the risk reward of that system is in order to make money, all right? And then this section here will tell you whether your calculations were right or wrong. At 1.5, in other words, you get £315 back for every trade, which is here. You will lose over a period of 100 trades. If you got 2 times back, it'll put you back in profit. So if you have a very low win rate, you need a high risk to reward rate. In other words, you need to win more when you win than you do when you lose. All right. So if I say that's £5, just so you can see very easy maths, you can see 2 to 1 is what you need to be. If you can get to 3 to 1, so you get 90 pips for every ones that you lose, you start making money on a very low win rate. And believe it or not, this is how fund managers work. A lot of them have very, very low win rates. I know a guy, incredibly wealthy, millionaire, and his win rate is 40%, which is here, it's there. He trades, well, he trades pretty big size actually. He trades about 45 quid a pip. All right. In 100 trades, he'll make 81 grand on 40% win rate. All right. And he's very good at it, but he's not stressed by all the losers. So makes money not winning all the time. My personality doesn't allow me to do that. I like to win, and I'm active, and I love the screen, so I'm pretty active trader. I can't do that. It drives me nuts. So I'm always looking to tinker to make it better, which is why I split my day trades and my swing trades, because my swing trades are a lower percentage down, but the return is greater, balances out, and I only look at them once a day. Keeps my mind safe. All right. day trading for me is something different. So what I'm going to do is I'm going to pull up my day trade score over the last 30 days. It's well documented in the videos that I show, because I very rarely have a red day. I do lose trades, but I don't lose days very often. And I worked it out with this as to what I need to get. So here we go. This one's mine. So I have a 92% win rate over the last 30 days based on, I'll just put it down to a basic fiver just so that's realistic. So there we go. We have 92%. Okay. And I have a return of 101. So that makes me money as well. So there you go, guys. Nice simple sheet to work with. Like say if you want it, just drop a decent donation in to buy me a coffee, because those proceeds do go to a good cause. And I'll send you the sheet. Simple as that. All right. And for those that have donated, I genuinely thank you, because it does make other people's lives a lot better. So stay safe, everybody. And remember, do what you love, money will follow. See you all on the next one.